You are experiencing a life-changing, powerful interview, and you are hearing it first from Arthur Robinson Jr.'s PowerfulInterviews.com.
Good evening, everyone. This is Arthur Robinson Jr. I'm the creator of PowerfulInterviews.com, and tonight I have another special interview for each and every one of you. Tonight I have a wonderful person on the call, and he's a great friend of mine. His name is Scott Pasinski. And for those that don't know Scott, let me explain to each and every one of you about this powerful, incredible man. Scott Pasinski is the founder of SJP Group Incorporated. Scott is a marketing expert and professional hired gun for the energy sector. He is responsible for connecting accredited investors with superior opportunities. These companies are A+ rated and accredited companies. These opportunities consistently provide 15% to 45% annual ROI, 85% to 100% of the principal investment is a little-known tax credit, as well as these investments provide savvy investors a long-term passive cash flow. Scott carries 22 years of experience in real estate, franchising, financing, and the investing sectors. Scott has committed his career to both excellence as well as innovation. As a student of the business world, Scott has traditionally been ahead of the game and has pioneered companies and industries before they became mainstream, and that is an awesome resume. Without further ado, I'd like to welcome the one, the only, the powerful Scott Pasinski to the call.
Thank you, Arthur. I appreciate that. The warm welcome. Thank you, everybody. I appreciate you taking the time to listen to both of us today. Thank you very much.
Well, I'd like to thank you, Scott, for taking time out of your busy schedule to educate me and the listeners worldwide about gas and oil investments. I gladly appreciate it.
I appreciate it, too. Thank you.
Now, what I'd like to know, and can you educate the listeners in regards to who is Scott Pasinski, how long you've been in your powerful industry, and what is your expertise, and can you break down in layman's terms so the listeners fully understand how can they take advantage of getting involved with oil production?
Okay, great. Thank you. Okay, so Scott Pasinski, excuse me, is a person just like everybody else. I've paid attention to market conditions. I'm looking for the best opportunities for myself and my peers, and I've always had a vision to see what the market, what's happening and how it translates to the future. And what attracted me into oil a few years back was I come from the real estate industry, and a little known fact that most people are unaware of, it's one of the secrets of the wealthy, is that oil investing, when done in a certain way, is actually real estate investing. And everybody knows that there's a lot of power to real estate investing. The markets have not been so favorable to investors, and the market's deteriorated. And a lot of experts also can feel that the traditional real estate market will continue to deteriorate. And a lot of people are skittish of that market. They're afraid of depreciation. They don't like the headaches associated with property management, tenants, etc. And I didn't either. A lot of people don't. So what makes this very attractive is that when you invest in oil in this particular way, it's called direct participation. It's not a stock. It's not an ETF. And, basically what you're dealing with is a direct ownership of a piece of property where oil is producing documentable and historical performance. So it's not exploratory either. So a lot of people are becoming aware of the fact that they love to invest in real estate, but they don't want to invest where we're accustomed to recently and watching the housing market depreciate like it does. And in our case, when a person makes an investment into oil real estate, what they do is they have major superior advantages. As I stated, you don't have to worry about depreciation. There's nothing to worry about with that because it's not applicable. You don't have to worry about tenants, as I stated, or property maintenance or managers, eviction issues. You have to worry about none of that. And this is what makes it very interesting. It's actually considered an active investment according to IRS and congressional standards. However, once you make the decision to invest, the level of activity of that investor is merely going to your mailbox and picking up a check every month, or having a direct deposit. So you log into your account online and you see the direct deposit of your monthly cash flow. So that's what it does. It creates a long-term monthly cash flow in a very passive manner. So a lot of investors are trying to figure out where do they put their money. You got stocks, you've got stock market and the volatility, you got gold, you got real estate, and wherever else people would traditionally put their money. And everyone has their own preferences, but this is such a unique niche that the Congress, what makes it really attractive is that Congress and the IRS have made specific tax codes for this industry, for investors to come in. And you can write off up to 100% of your investment. You can't do that if you go put money in the stock market. You can't do that if you buy gold. Not that any of those are bad, because you should diversify. And for the sake of full disclosure, I just want to make sure everyone is aware. I'm not an attorney. I'm not a CPA. And I'm not going to give you investment advice. I'm going to tell you what I know as being a part of the oil and gas industry and the superior advantages associated with it.
Now, Scott, can you break down in layman's terms so the listeners fully understand in regards to would there be the number one reason for investing in oil? Would that be quick returns?
Okay. Yeah, I find that most investors, when they realize what this opportunity is all about, there's about 18. I found that there's 18 variables why people make these investments. But the primary variables, we'll talk about the first three right now. And the first one is that when you make an investment in oil real estate, you're looking at 15 to 45% annual returns. Obviously, when I give that variance, it's only because it depends on which project you're investing in. And I also want to tell you that, on purpose, I'm very conservative in what I say to people on the calls or when I talk to you individually. So when I say 15 to 45%, I do consider that to be conservative. And also, so those returns, when I talk to a lot of folks, I hear, and Arthur, you probably would echo this, I know a lot of people who think that when they make 8% or 6% or 10% right now, they're happy with those returns in this market. And I'm going to tell you consistently that 15 to 45% is what people should expect. And in addition, you're receiving your first check. Remember, this is monthly cash flow. Like when you buy gold, and it's a security, it's a hedge against inflation, and I understand all that. But the prominent difference is there's no cash flow associated with gold, and there's $11 trillion of liquid capital, according to a report by Reuters. And I read it stated that there's $11 trillion of liquid capital sitting on the sideline because investors want cash flow. They want cash flow. So this opportunity provides cash flow. That's huge. You're getting your first check inside of 30 to 90 days as well. So that's huge. So that's the number one reason why investors look at this. Number two, dollar for dollar, between 85 cents and 100% of your investment is a tax credit. Again, as I stated, Congress has created 7 unique and distinct tax advantages to this real estate product, aside from all the advantages that everyone is used to in real estate. So a lot of people are not aware of that. So if you invest $100,000 as an example inside of 1, 2, depending on the project, again, everything is always project by project specific. So when you invest $100,000, again, just as an example, you are able to write off $100,000, somewhere between 85 and 100, we'll say, just to be conservative, within 1 to 5 years of making your investment. So people who have a heavy tax burden this year would typically make an investment.